Tax Professionals today from CPA Magazine. Hiding income in offshore accounts, identity theft, return preparer fraud, and filing false or misleading tax forms top the annual list of Dirty Dozen tax scams in 2011, the IRS announced today. The Dirty Dozen represents the worst of the worst tax scams, IRS Commissioner Doug Shulman said. Frivolous arguments, non-taxable Social Security benefits, abuse of charitable organizations and deductions, abusive retirement plans, disguised corporate ownership, zero wages, fuel tax credit scams, and misuse of trust round out the Dirty Dozen tax scams announced today. Barbara Weltman reminds us there is a free IRS webinar today on retirement plans. You can also watch an archive if you miss the start time today. Also today, Weaver reminds clients that detailed records of every single stock trade help avoid a dreaded audit from the IRS. Under the Emergency Economic Stabilization Act of 2008, securities brokers will eventually be required to provide the cost basis, calculate gains and losses, and classify them as short-term or long-term. This information will then be reported to customers and the IRS. These expanded reporting requirements began January the 1st for corporate stock shares and mutual fund shares. Grant Thornton tax partner Mel Schwartz said today, "There are some last-minute strategies you can use to affect your 2010 return, including contributing to a deductible IRA or a Roth IRA and setting up and contributing to a health savings account." Finally, under the category of tax trivia or vanishing exemptions, H&R Block reminds us that in 1954 the average American family's exemptions amounted to 57% of its income, and now it's under 25%. That sums up the CPA Tax Professional News for today. Thanks for reading CPA Magazine, and have a great day.